Hi, I'm Paige Steers. I'm here at the MBA conference in Atlanta, bringing you insights from experts. I'm here with Tom Melody of Jones Lang LaSalle. And Tom, you've been talking to a bunch of lenders all weekend and week. What have they been saying in terms of production goals for 2012? Are we seeing a big influx of capital this year?
I think everyone's optimistic on their goals for 2012. There's not really allocations for the most part on the life companies or the CMBS lenders, but I think the expectations are that they're going to probably increase volume somewhere in the kind of 10 to 25%, depending on who you talk to. As it relates to CMBS, I think we're real optimistic on the CMBS market in that, given the fact that there seems to be more capital sources, the confidence level with the CMBS lenders has increased dramatically, and spreads are down, that the volume levels will increase maybe up to 50 to 100% over what it was last year.
Oh. So that's a lot of new money into the system, which is a good thing. Let's switch over to the borrower side, because Jones Lang LaSalle did a survey, and the borrowers talked about choosing their lending partner. A couple things important to them. One, certainty of execution. Two, flexibility. And third, pricing and terms. So is that still going to be the three most important things in 2012 as all these new capital sources come in?
I think that's always very important. My guess is in surveys that we've done in the past, it's probably been the same thing. So I think deliverability is huge, especially given the last couple of years. Life companies, very deliverable. CMBS market, the second half of last year was not real deliverable, but I think that's what everyone's looking at right now, is what's the CMBS market going to look like for the first 6 months, and I think the expectations are much more deliverable. As it relates to pricing, I think the cost of capital is down across the board, life companies and CMBS lenders, and the availability of capital and the amount of capital is substantial, more than it's been since 2007.
So if we have substantial capital in the market, is it a good time to be a buyer no matter what product you have, or is there still a little bit of specialty that you have in terms of core products and core markets? How wide are we talking about a recovery here?
Well, I think it's always good to be a buyer. It's always good to be a seller. So that's why we got both. So I think the secondary, tertiary markets are going to improve dramatically from a value standpoint, given that the CMBS market tends to focus a little bit more on the secondary, tertiary markets, the B product, the higher leverage transactions. So when the CMBS market is down, what you'll see is the values are down. Right now, I think the expectations are values are going to go up in those markets because of the cost of capital and the availability of capital.
Okay, so it sounds like rising value is a good thing. A lot more capital availability. Those are good things for 2012. We'll watch all these trends. Thanks so much for sharing with us, Tom.
Great, Paige. Thanks.